The US dollar is down marginally versus the major currency pairs in this video. I'll take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. Yesterday, the dollar moved sharply to the upside with the pound versus US dollar falling. That's the dollar going higher by over 1% versus that currency pair. The pound today is up 0.19%, so the dollar's down by that amount versus the Great British Pound. I'll go through that story behind that. But also we have a lot of fundamental news on the table, with the Federal Reserve expected to keep rates unchanged at 2 p.m. this afternoon. The Fed will release their economic projections for growth, for employment, for inflation, and also release the dot plot for their expectations for interest rates, not only for the end of the year, but for next year and the year after that. We'll see how that plays out and how the market reacts to what Fed Chair Powell says as well. So lots on the table. Let's get into the technicals to get things started. Looking at the euro versus US dollar on the hourly chart, the price fell sharply yesterday, and in the process we moved below the 100 and 200 hour moving averages. That break below 200 hour moving average should have led to further momentum, but as you can see, the market waffled into the close with the price trying to stay below that moving average. In the Asian session, we finally moved back to the upside, and that gave the buyers a go ahead to correct higher. We moved toward the low price from back here. I guess that's that would be Monday's trade, but found willing sellers against that level, and we rotated back to the downside. We are now trading just above the 200 hour moving average, a green line in this chart. If we break back below that level and stay below that level, that would be more bearish. And we have traders looking down toward the 38.2% retracement as the ultimate target. After a trend-like move like we saw here, you expect a retracement to get to and through the 38.2% retracement if the bias is to change. We do have a minor change in bias, falling below the 200-hour moving average yesterday, but we're back above that level, and the market is more in neutral territory. If the price should move higher, we need to get above this level at the 1.15239 level, 24 level, and then we'll look toward the 100-hour moving average, 1.15447. So those are the key levels: the 100, 200-hour moving average, break below 200, look for the 38.2% retracement. Taking a look at the dollar versus yen, this currency pair moved up to test the high price that we saw in last week's trading up here near the 1.14575 level. It's this high right here. We also broke above the 50% retracement for the second time. That's how the move down from a high price over here in May to the low price that we saw in May. That 50% came in at 145.375. So getting above one level, not getting above the next level, proved to be fatal for the pair, or not fatal, but it led to the buyers turning to sellers, and we rotated back to the downside. As you can see, the current hourly bar is traded to new lows or near new lows for the day, but we're seeing a little bit of a bounce at 144.88. The next target on the downside comes at the 38.2% retracement, and then we look toward this three technical levels, including the broken 38.2% retracement, the 200-hour moving average, and then the 100-hour moving average on the downside. All those levels need to be broken to increase the bearish bias going forward. If they can't be broken, then the bias, in the short term at least, remains in the favor of the buyers. Let's face it, over the last since this period right here, the market's been volatile, but up and down volatile between the low down here at 142.34 and the high at 145.50. It's still a big range, but you can see the ups and downs that we've had in this pair. We do need to get above the 50% retracement and stay above that level to increase the bullish bias. If we move back below the moving averages, that would be more negative. Finally, let's take a look at the sterling versus US dollar. And as mentioned, this currency pair fell sharply yesterday, and this is the 4-hour chart of the pair. In the process, we moved below the 100-bar moving average first, after initially trying to hold support against that level. Then we fell below this trend line right through here, increasing the bearish bias more, and then technical levels we fell down to and through the 200 bar moving average. Note back here, the price held support against this level before moving to the upside. We also held support right here against a level. We did have a failed break right here, and that kind of looks like this move right here in trading it today. We've seen the rotation back to the upside. That took the price back to this swing area between 134.60 to 134.72. Getting above that level and staying above that level would give the buyers a little bit more confidence to push to the upside. However, if they can't get above that level and the price moves back below the 200 bar moving average, it's more down for this currency pair. Again, tomorrow the Bank of England does have their interest rate decision, so we'll see how that comes into the equation. But first things first, we have the Fed decision. We have geopolitical risks. We even have initial jobless claims today, a day early, as a result of the market holiday and federal holiday tomorrow. For Juneteenth. So all those are influences to the market. We'll see how it all plays out. So that's my tactical look at the three major currency pairs to kickstart your day in the U.S. session. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.